Welcome back, traders. Ever wondered how to spot market imbalances and use them to your advantage? Well, you are in the right place. In today's video, I will break down what imbalance is, how you can incorporate Forex imbalance analysis into your trading strategy, and how you can leverage it to make informed decisions. If you are ready to level up your trading game, hit that subscribe button and let's get started. So right here, first things first, what exactly is Forex imbalance? In simple terms, it refers to an uneven distribution of buy and sell orders within the market, okay? When there's an imbalance, it indicates a greater demand or supply of a currency pair. So imbalance can actually have a significant impact on prices and also give you a good trading opportunity. So let's explore a couple of examples to illustrate how Forex imbalance can affect the market, okay? So right here on diagram 1, suppose there is a sudden surge in buy orders for a currency pair indicating a high demand around here, okay? So guys, this can lead to what we refer to as imbalance here, right? I'm going to explain this concept very. So this is what we refer to as imbalance, causing the price to rise due to increased buying pressure around this demand zone, okay? On the other hand, if there is a flood of sell orders around a supply zone somewhere around here, it can create an imbalance that drives the price down right here. So how do you clearly identify imbalance on your chart? Okay, for a bullish trend right here, which is on the first box, for a bullish trend right here, an imbalance, okay, is the gap between the high of the first candle, right, the bullish candle around the supply zone, and then the low of the third candle. All right, so right here you can see this is the high of this first candle right here, okay, and then the low of the third candle, not the second candle guys, the low of the third candle. So right here we have the low right here, okay? So I'm just going to extend it this way. So as you can see, we have a clear gap around this zone. This is where we have a clear imbalance, as you can see, okay? So some persons also refer to it as fair value gap. So the gap between the high of the first candle and the low of the third candle is known as the imbalance zone or the fair value gap zone. So right here, as you can see guys, this is a demand zone, okay? So this implies that this imbalance was caused as a result of the influx of buy orders from this zone, right, would lead to this imbalance right here. So on the other hand guys, if this wick of the third candle, right, mitigates this level, okay, mitigates the high of the first candle, that means it is balanced, okay? So it is no longer an imbalance, but rather it is balanced. So price no longer needs to come back to mitigate this level. But in a situation whereby we have a gap, right, between this zone and this zone, so we are obviously expecting price, to push higher, come back, mitigate this level, and then push higher, okay? So moving on, let's take a look at the sell scenario, okay? In the sell scenario, we have imbalance to be the gap between the low of the candle, right, and the high of the third candle right here, okay? So as you can see, we have a clear fair value gap or imbalance sitting around this zone, okay? So we are expecting price to actually push lower, okay, and then go back to mitigate the imbalance, or probably the POI here, higher time frame POI, or an order block sitting around this zone. So guys, this is how to identify a clear imbalance in a downward trend. So guys, let's take a look at the diagram 3. Right here, as you can see, this is still a downward trend scenario, okay? So as you can see right here, this is the first candle right low, okay, and this is the third candle high, all right here. So the first candle low has been mitigated, as we can clearly see, it has been mitigated, so there is no imbalance sitting around here. Now right here on the fourth diagram here, okay, as you can see, this is for a bullish trend scenario. So right here, do we have a clear imbalance? Let's take a look at this. This is the first candle high, this is for an upward trend, and then the low of the third candle. So as we can see, it has already been mitigated, so there is no imbalance sitting right here, okay? So let's take a look at the fifth scenario. So right here guys, you can see this is the first candle low, okay, right here, and then we have our third candle. Where is our third candle? right here, this is our third candle. This is not our third candle because they are all inside bar to the second candle. Guys, can you see? Always take note of the inside bar candles because the market makers also use this as traps on the forex market to deceive some retail traders who are not aware of this concept. So as you can see, the second bearish momentum candle right here still have a protected low around this zone. Okay, so all of these candles are trading between this high of this candle and this low right here. All right, so guys, what are we expecting? We're expecting price to actually close below this candle. So any candle that closes below or sweeps the low, like let's say if the wick of this other candle, you know, sweeps it like this, then we can now work with this other candle right here. All right, but since there is no wick close below it, then we are still focusing on this low since it's still protected. So our third candle remains this other candle right here. So right here, this becomes our third candle. So all of these candles right here are all inside bar candles to this red candle. Guys, can you see? So with that being said, all right, all of these are inside bar candles like I have said earlier. So our third candle remains this candle right here. Okay, with that being said, since this candle took off the low of this other second candle, right, so we are going to work with the high of this candle and the low of this candle. Okay, so this becomes our what? Imbalance right here. All right, so our imbalance zone is now seated like this. So do not make mistake of marking this green candle as your imbalance. No guys, that is smart money trap. Okay, so some persons after looking at the chart, right, they get confused and they now conclude that there is no imbalance sitting around here. So guys, with this example, you can clearly see that there is imbalance sitting here. So always open your eyes to see clearly what the forex market is doing, right? So here on the last scenario, guys, we have our first candle high here. Okay, as you can see, the third candle mitigated this wick. Okay, this level, it was mitigated, but it is not valid because it is still an inside bar. This high is still protected. The price did not go above it, so, or the wick of this candle did not go above it, so this level, this candle is invalid. So where is the candle that took off the high of this other previous momentum candle? We have this bullish candle right here. Okay, broke the high of this candle. So on that note, guys, this becomes our third candle and this becomes our fair value gap because you're working with the low of this candle. Okay, so our fair value gap, our imbalance zone, now remains this level. All right, so guys, open your eyes, train your eyes to see these irregularities, these deceptions, these traps in the forex market. Okay, so moving on, guys, how can you incorporate forex imbalance analysis into your trading strategy? So let's head on to the chart so we can look at few practical tips and examples. So right here, as you can see, guys, the market is bullish. Okay, so can you identify any fair value gap right here? Obviously we have a fair value gap or imbalance sitting around this zone. Okay, we have a fair value gap here, and then we also have another fair value gap somewhere around here. All right, so let's just take a look at how to mark this accurately. Okay, so guys, first thing here is you need to combine these concepts with other technical analysis. Okay, you need to use forex imbalance analysis in conjunction with other technical analysis such as trend line, you know, trading in the direction of the trend and so on. So right here, as we can see, right, this market is bullish. Okay, so we can clearly see that there is imbalance sitting at various zones. So how do we trade using this concept? Okay, so looking left here, you can see that price just tapped into a demand zone right here. Okay, we can see that price just tapped into this demand zone and created a clear imbalance. All right, now we are going to trade in the direction of the trend. So always remember that context matters. Okay, you don't just trade imbalance everywhere you see imbalance. There are some contents that you see an imbalance and you ignore, just like you don't trade hammer candlestick at every formation. No, context matters. All right, so right here you can see that we also have a clear imbalance sitting around here. Okay, a clear imbalance sitting around here, but this is a bearish imbalance signal. So this is not valid because the market is bullish. All right, so we are going to ignore this. Okay, so as you can see here, price just tapped into a demand zone. Okay, let me shrink it so you can see. So right here you can see that this zone is valid. All right, so as you can see, this zone right here is valid, acted right here as support, acted right here as resistance, acted right here as support, and acting right here as support. So this zone is valid. All right, so moving on, after price tapped into this zone, what happened? It created a clear imbalance. But how do we identify the imbalance? Guys, let's take a look at this. Okay, so guys, let's start with the first bearish candle, all right, that tapped into our POI zone. So right here we can see that the third candle, right, it has been mitigated. Then we go with the second candle, right. This second candle swept the high of this candle, so it is valid. It is not an inside bar candle, so we can see that it has also been mitigated right here. All right, so the third candle, okay, all right, we have the third candle high right here. So we have our imbalance zone sitting around this zone. Okay, so all of these candles, none went above this candle, so we are going to ignore them. So right here we have our imbalance zone sitting around here. So right here I'm going to use the rectangle tool, all right, to mark out that zone. Okay, so let's mark out the imbalance zone. We have it somewhere around here. All right, so as we can see, price tapped into our imbalance zone and pushed higher. So right here, guys, you can see all these candles right here has been mitigated, and this is the only unmitigated zone right here. So what happened? Price respected our imbalance zone. So price can actually mitigate the imbalance, price can mitigate the order flow, price can mitigate the order block, and also mitigate supply and demand zones. So it's for you to wait for price at any of these zones and go to lower time frame to look for your entry pattern. If price breaks this level, then if there is any other unmitigated POI below, you can wait for it. If price does not respect this POI, it can come lower to another POI zone. So that is why you always need to wait for lower time frame entry confirmation before you ride the trade. So moving on, guys, right, we have another imbalance created right here. If you can see clearly, guys, you would be able to see it. So right here we have a clear imbalance sitting around this zone. Okay, so guys, you see there is a fair value gap around here. All right, so this is the low of the candle, right, and then we have the high of the third candle right here. And what happened? Price did mitigate our zone right here and pushed higher. So moving on, guys, what happened right here? So right here, guys, you can see clearly, you see that we have another fair value gap around this zone. Okay, so guys, remember, you are trading in the direction of the trend, and you also need to wait for other confluences. Use this as an extra confluence in your trading style. So right here, price mitigated our imbalance zone and pushed higher. Now some persons can also mark this level as their order block. Okay, they can mark this level as their order block right here. Yes, this is an order block sitting right here. But what happened? Okay, so price did not mitigate the order block. Why? Because if I zoom this clearly, guys, you can see that the third candle have mitigated the order block. Okay, so price did not need to come back to respect the order block, but rather price respected the imbalance and pushed higher. So price always comes to fill out the gaps in the forex market, right? So moving on right here, what happened? So right here, guys, we have a momentum shift, okay, from bullish to bearish. So right here, after a change of character, some persons mark here, right, as their imbalance, okay, because it's looking so obvious. But guys, if you take a closer picture or closer look at this, you realize that there is no imbalance right here. It has already been mitigated. All right, this candle has already mitigated this one. So right here, guys, where is our imbalance? Right here. So as you can see we have a clear imbalance sitting around here. Okay, we have a clear imbalance sitting around here. So guys, as you can see here, price filled our imbalance here and then mitigated our POI around this zone. Okay, so if you can see that there's an order block around this zone which price mitigated, right, and pushed lower after filling an imbalance. So always take note of these zones. Right here, some persons will do the wrong thing. Okay, they will mark this red candle right here as their POI or order block. Guys, this is not a valid order block. The bullish candle, the bearish candle right here is not a valid order block Why is it so? Because it did not sweep the high of the previous candle. So this is smart money trap, okay? Even this other green candle is not a valid order block. Why? Because it did not sweep the high of the previous candle. So right here, our valid order block is the bullish candle, right, that swept the high of the previous candles. So right here, this is our order block sitting here. If you have not watched my video on how to mark out the correct order block the right way, guys, you can check the link in the description box to watch the video and stay out of the smart money trap. So right here, guys, you can see price tapped into the order block, right, after filling the imbalance and pushed lower. So right here, guys, moving on, you can still see after tapping into our POI, right, you can see that the market created another imbalance around this zone. Okay, sorry for my drawing skills right here. And then we can also see another imbalance seated right here, right, and price it was mitigated this level and pushed lower. So guys, if you can understand this concept, train your eyes to see these concepts on the chart, you can also add them to your trading style, to your trading strategy, and also enhance your winning rate. Okay, so to wrap it up, guys, forex imbalance is an essential concept for you to grasp. It also provides you valuable insight into market dynamics and can also help you identify potential trading opportunities. Okay, so you can leverage forex imbalance and combine it with technical analysis to enhance your trading strategies. And that's a wrap for today's video. Like I said previously, you can leverage forex imbalance and combine it with technical analysis to enhance your trading strategy and maximize profits. Thank you for watching this video to the end. If you found this video helpful, don't forget to give it a thumbs up, subscribe, and hit the notification bell to stay updated on my latest forex trading secrets. And if you have any questions, feel free to drop a comment below. I'll be glad to get a feedback from you. Thank you, and I'll see you in the next video. Stay connected to wealth.